Next company, Ecolab.
Ecolab.
They produce and market cleaning and sanitation products for hospitality, healthcare, and industrial markets.
I would imagine they're doing well this year.
So that's the thing. Automatic got the bat. I'm like, okay, they're going to have a big surge this year in revenue and profit. And I don't know if I'm going to continue that surge going, because the question becomes, is this a new way of life where all these products are going to be, I mean, is there going to be, yeah, I don't know if I'm gonna be, I can't give the full value of their, like, I can't look at their recent surge and say this is permanent forever, because we've had a big surge to cleaning and products and things like that. But is that likely to continue once we get past the corona? Is it gonna be something that's sustainable forever? I don't know.
They're definitely at the top of their peak in terms of their stock price. So usually you're already not in love with these type of companies, right?
They've been around for, look how long they've been around for. You could have bought them for, we came to the U.S. in 1984.
Wow.
They were selling for, I always look at that, by the way.
So again, if you're watching later,
$1.40.
If you're watching later, this is all for Questline. We don't know much about this company, but we will look out the financials to see if it's a healthy company and see if it's a buy or not a buy, Paul. Shall we look at, what is the market cap for Ecolab?
62 billion. So 62 billion. PE is negative. Wow. They lost $1 billion in the last 12 months. How's that even possible?
Oh boy.
So X on the PE, 8% profit margin.
Still
X also.
So with PE, folks, we want that less than 20, and we want our profit margin above 10%, which we're not doing well so far.
First off, how did they even lose money in the last 12 months? This has been the cleaning supply business world. Okay, that's already a red flag to me.
How about revenue growth over the past 5 years?
We have seen the Ecolab cars around. 13.55 to 14.9. Now remember, this is going to December of 2019. So if you want to look at trailing 12 months, this is weird to me.
This one stumped you.
Yeah, this one's odd. Like, how are they not making a ton of money right now? All right, so profit, again, $1 billion to $1.55 billion. Check mark there, but remember, in the last 12 months, they've lost a lot of money. They've lost $1 billion in sometime in 2020. You need to understand why they lost $1 billion, okay? You've got to understand that.
Well, how was revenue? I'm sorry, not good?
Revenue growth was there, but it's not, and profit growth is there, but this last year has been a big loss. So you have to understand that.
Okay.
Shares outstanding, 296 million, down to 288. So check mark there.
All right, so they're buying back shares. That's good to see. How about current assets greater than current liabilities, Paul?
Current assets are $5 billion. Current liabilities are 3.1. Check mark there.
Okay. Free cash flow growth, the granddaddy of them all. We want free cash flow growth over the past 5 years, Paul.
So we had 1.18, so we'll call it 1.2, just to be safe, to 1.6. Check mark there. And then we have 1.2, 1.15, and 1.4. Averages around 1.3 billion.
So 1.3 billion, this is free cash flow average over the past 5 years.
Why did they lose money this year? I don't understand how their revenue wasn't that much lower. That's the thing I'm going to tell people. And they lost $1 billion. There must be some, and the other thing is, there was a write-off. Because look, no, wait a second. Okay, so 1.3, I'm conservative now. I'm going to multiply it by 12. So what is that? That's 13 and 2.6 is 15.6 billion. What's the market cap?
Ecolab?
Yeah.
62 billion. So wait. Let me slow you down. Because not all of us are laughing because we don't know what just happened.
Guys, right now, their average free cash flow in the last 5 years is 1.3 billion. Even call it times 20, which I don't think you can justify that with their growth levels and the fact they just lost money in the last year. Multiplied by 20 is still 26 billion. We're paying $26 billion to get basically 5% of your return every year in cash flow. And they're currently selling for 62 billion bucks. Even take their last year and multiply it by 20, and you're still at 32 billion. Do you see why I do this exercise and do general ideas? Can I look at it saying, every metric we're looking at, giving them every benefit of the doubt, I'm still not buying them. So I just move on. Yep. So I'm looking at this saying, I'm not going to even look at this company until it's a lot lower in price.